welcome to my morning report analysis videos on Thursday the 3rd of November with me, Japan market analyst at Antic Markets. We've got a fairly sort of neutral European Open, a bit mixed. FTSE's mildly higher, DAX mildly lower, nothing too significant in terms of direction, but you've still got this really key sort of moves in the markets on the back of this sort of rebalancing of the polls in the States. The fact that the two candidates, Trump and Clinton, are fairly neck and neck now, and we've seen this significant selling pressure through the dollar, having sort of been over 99 figure just a week ago. It's now actually back sort of, well, it's about 99.1, so that was almost 2% of 97.1, which was 2% of correction earlier this morning. We're seeing a mild retracement, and that mild retracement has come as we've seen bond yields starting to rally on both the 2-year and the 10-year. Now this is interesting because you've also seen gold, which is coming back down again. Is this sort of beginning to be the market sort of just settling down a bit, just taking a little bit of the steam out of that move? It'll be very interesting to watch. I think this could be a bit of a near-term turning point, possibly again, with also the fact that you've got the non-farm payrolls tomorrow. Perhaps markets are feeling a little bit more sort of towards that. So some interesting moves that we've got in these markets today. Now you've still got the VIX index, which is volatility still very high, and that reflects this big selling pressure that we've seen through equity markets in the last sort of few days. I'll talk about that in my chart of the day, which is the S&P 500. But really interesting moves that we're seeing as the market sort of looks ahead, not only to non-farm payrolls, but also obviously this massive election we've got on Tuesday, which could be a significant volatility event for markets. So really interesting developments we've got today. Now, in terms of our economic announcements today, we've got the service sector PMIs. Started off already with the China service sector PMI, which was pretty positive, 52.4, and then we're going to look ahead more towards the UK service sector PMI, which, if I can find it, 52.4, which is basically where it was last month, 52.6. No real change there on that. But we've also got the States at 3 o'clock, which is expected, 2 o'clock actually, with the clocks difference, 56.0, so again a pretty strong number expected there. But and further interesting events coming out of the UK today. We've got not only the Bank of England Super Thursday, which is rates decision at 12 o'clock. Rates decision expected to be flat, no change there expected. Also no change to the voting makeup either, or quantitative easing. But it'll also be interesting by the fact that it's the first press conference or questioning that Mark Carney would have had following his decision to sort of end his tenureship as Bank of England governor in June 2019. But before that, we've got a court decision, court ruling on the legality of Theresa May triggering Article 50. So depending on how that comes out, we could get a lot of volatility this morning. So lots going on, lots to move markets. Certainly sterling will be in focus as well. So could be a bit of an interesting day today. Now, we've got my chart today, which is the S&P 500. We've had these selling pressure coming through stocks in the last sort of week or so, as certainly since last Friday, since Donald Trump started to perform much better in the polls, and that has now broken down this 2120 level of support to complete a top pattern. Now, this is the uptrend that we've had since the beginning of the year, really much. But I wanted to also focus on this back in late 2015, where we sort of saw another sort of topping phase, which started to then sharply sell off. Now that sharp sell-off came on as the markets had a bit of a negative reaction to the FOMC rate hike. Now we're seeing the prospects of another rate hike this year in December, and could we see another selling pressure? Now we saw obviously Brexit-related selling pressure coming through as around about 120 ticks of downside. So there is, I think, further downside that we're going to see here. So that little top pattern we've got here, arguably a double top, measures between 50 and 60 ticks to the downside. That would suggest sort of between 60 and 70 ticks, which would suggest maybe sort of 2050 area, which is again a bit of a pivot area. Not not huge, but still a bit of an old support there. So 2050 could easily be seen. We've got the deterioration in the momentum indicators, RSI falling away, stochastics and MACD lines negatively configured. Now 2120 becomes a basis of resistance. We've had a clean candle clear of that breakdown. That is the neckline 2120. So I think that is a key level of resistance. 2112 overnight was the sort of arguably the little rebound resistance, so we've got that in place as resistance, and I think that it is a deteriorating outlook now near term. I think rallies could well be seen as a chance to sell. Now obviously we've got this election on Tuesday. That is going to have a big say in the direction near term, I think, in the S&P 500, but looking further out, I'd say that we could see rallies coming under an increasingly sort of selling pressure because of the election because of the Fed rate hike that we've got in December as well. So I think all these factors are still pointing towards a correction in these equity markets, and is likely to be seen, I think, around towards the end of the year. So I wish you good luck in your trading today, and I will speak to you later. Thank you.